Hello again, traders. Hope everyone's doing well. This is Ankit from Mavic Currencies, and this is the Currency Room for May 15th to May 20th. A lot to talk about. Another epic week down the books. So let's talk about it. Let's take a look at the markets together, do analysis, and then talk about the outlook for the upcoming week and potential trades we'll be looking at. So let's start with this market's highlights. A roller coaster moves in the equities, and I must say that I haven't really changed that heading for quite a while. And as you can see, that this is the sixth straight week of losses in the markets. And this is where things get interesting when things are so stretched out. And this is where we have to go back in time and see, okay, when was the last time we saw this kind of weakness? Because this is something that's new for a lot of traders, especially if you haven't really traded for a long time. This is where you're seeing something that haven't happened in the past few years. So going back to 2011, that was the last time we saw 6 consecutive straight weeks of losses. So that's ironically the timing was kind of similar. You know, it was April to May. That was the timeline for the last time when we saw this kind of decline, and here we are, almost 8 to 9 years later. We're seeing the exact same thing. So we'll take a look at the charts, but let's talk about other things that are worth taking a look at. Yields pull back, and that was something that has been quite a topic of discussion. Everybody's worried about inflation. That's not a new news. But this week, we did notice the yields dipped below the 3% mark. So we almost hit 3.2% before dipping below 3%. So we are down 36.7% for the week in the yields. So that's the biggest weekly decline since February 2022. So this is where I always like to take a look at these dates, because these is what we call turning points. You know, if something hasn't happened in a while and you see something takes place, is that a point of reversion? Is that a point of inflection? So that's something we have to consider as well. The U.S. dollar, same thing, continue to push higher, and ironically, sixth straight week of gains in the U.S. dollar as well. So very much similar to what we saw in the equity market. So we have seen that correlation takes place. We've seen the dollar acting as a safe haven currency. So very similar price action, but also notable that the longest streak of weekly gains in the US dollar since 2014. And this is where charts looks interesting when you go back to 2014, because you can see the magnitude of the moves that took place, but also what preceded with that gains. You know, there is this the end of it, or is this just the beginning of a trend? So that's something we'll take a look at the charts as well and look at those possible case scenarios. Economic reports, we had the CPI report that came out this week, and wow, that was quite a news event to trade, because we saw a lot of U-turns that took place, which we don't usually see, this big U-turns that take place, especially post the price action that we get from the CPI. But this one was quite a mover. So it was above expectation. I was kind of surprised by that as well, because last month it kind of came in line with expectations. So this time around, above expectation, core CPI above expectation. So that created a lot of movement. So looking at this movements in the markets, you know, I had two kind of major markers that I looked at. One was the FOMC that came out last week, and that didn't save the markets. Here we are a week later, we had the CPI, and that was also behind us now as well. So we have to really take a look at where markets are, and then take a look at things in a bigger picture. So let's take a look at this week's review. So let's start with the broader weekly performance, and this was a pretty negative week. And even though if you take a look at the chart for S&P 500, we'll see there's quite a tail that we're getting today, but we are also coming off from a pretty ugly week. So we are still in the water. We're still negative for the week. Nothing really has changed, but we're getting a nice price action in the past 24 hours, which is really giving us a bit of a relief rally, a bit of a hope that this market is trying to find a bottom and things are about to change. We'll see if that happens, but we have to kind of take a look at market from every little aspect of it and see where we are in this macro scheme of things, and do we want to be making sure that we are on the right side of the markets. So looking at the percentage return, you can see that the S&P was down still with the gain that we've seen from last 24 hours. We are up, but we're still down 2.5%. VT World Stock Index down 1.68%. Crypto was a bloodbath, down 12.5%. And we'll see. There's some cryptos that were down 30%, and then there's no good news in the crypto market so far. Gold was also down 4%, so not really playing a safe haven asset there. And then the oil was almost flat for the week. Again, big movements, big fluctuations, but we still weren't able to notch out a positive week, which still marks as a declining 6 weeks in a row. And this is where, going back in time, I think I was able to only find about 6 weeks or 6 or 7 weeks. So we are pushing the boundaries here, and we have to see if there's a bit of a change coming in the market regime as market continues to go on the same path. As far as the currency market goes, we can see that the currency markets had quite a movement as well. And looking at Japanese yen, which something hasn't been really on this positive swing, we got this nice movement. We noticed that change last week, and then here we are, the yen being the best performer this week by 2.27%. Dollar again remains a 1.1, still pretty strong across the board. And the weakness and the pain still was in the growth currencies like the Aussie and the Kiwi. Outside of that, we see that the in the middle there, Swiss franc, euro, pound, kind of mixed. Both the euro and Swiss franc were weaker. I mean, we have seen a bit of a correlation taking place between those two pairs, but so far this week they were pretty similar as far as the performance goes. Pounds is in a bit of a no man's land there, and look at that, Canadian dollar. So we've been talking about Canadian dollar. The trend score has been a +2 to +3, but the velocity just hasn't been there. And then here we are, out of that little basing pattern that we were seeing in the markets, we are now trying to get a bit of an upswing as well. So this is another currency pair worth taking a look at, because aside from the dollar, which has been on this amazing incline movement, we have seen CAD also do really well this time. So something to also pay attention to. Now let's get back into the crypto world. And cryptocurrencies, as you can see, a lot of negative numbers. So again, Bitcoin was down 11.78%. Bitcoin Cash is down 21%. And then Ethereum is down 18%. And also realize that these are the numbers after a rally in the markets in the last 24 hours. I mean, things looked ugly yesterday where things were down 30%. So these are big movements. And anybody that has been trading for a while, this is something that you're witnessing now. But as you look back in time, you look at charts, you realize that things just happen over time. If you could look back in time, things have taken place maybe a little bit longer than you have been trading for. But this is not new in the markets. Market continued to perform or do certain things that is very repetitive over the years. So let's do a quick market analysis and then take a look at how things are. Where do we stand here? And most importantly, how should we come prepared for the next trading week? So looking at the charts, and let's start with the S&P 500. And you can see that the charts are still pretty negative, but we are actually seeing a much a better day today. So let's actually jump live into the charts. And we'll see that the S&P 500 had a nice little rally on the daily chart. You can see after that decline, we are actually trying to get above this pivot point here. So we got a nice little reversal candle yesterday and a bit of a positive today. So today was actually important because, if you've seen the markets lately, we have almost sold off every single movement. I mean, post that FOMC, we have seen a straight decline. So nice little rally here, but this is still called a relief rally. Overall, we're still in a downtrend, so we still have a lot of ways to kind of cut out for us in order to get back to where things were. All right, so let's get back into other charts and take a look at the Bitcoin. I mean, Bitcoin exactly do the exact same thing. giving us a nice little reversal here. Vanguard total index, we're seeing a bit of a reversal as well. So shorter term rally, we'll have to wait and see if this rally has any sort of legs to hold on to. The overall trend score for the month remains a -2 to -3, but you have to really keep in mind that even in a strong trending scores, you can get some really impressive rallies, and those rallies could be a lot more aggressive to the upside, which makes you think, is the market about to reverse? So you have to really keep in mind that we could get a bit of an opposite price action or the reversal setups in this trending markets, which doesn't really change things on a trending score, but in a shorter term, it could change things to a bit more of a positive side as far as a relief rally goes. Now let's talk about schedule. So next week, again, this week was a very quiet week. As we looked at the markets, there wasn't a whole lot going on other than the CPI. So markets were the one that were driving the moves in currency markets and all the other markets like the crypto or even the commodities. Next week, we start to get back into a lot more movement when it comes to news events. We have retail sales out of the U.S., Fed Chair Powell speaking next week. I think what I'll be looking forward to is trading the CPI figures from pound and CAD. Got the employment report on Wednesday, and again, they're looking for a drop. And this is the difference that we are not really in this declining job market. I mean, it doesn't matter which country you look at. I mean, they're looking for an increase in jobs. So far, the market still looks strong. Economic numbers still look strong, but markets definitely have his own agenda here. So that's what's going on. Let's take a look at the next week outlook. Their markets again likely to find a bottom soon. Based on the price action where we've seen in the past 24 to 48 hours, it looks a little bit encouraging, considering what we have seen in the market. So next week when we come back, the focus again will go back into trying to add on to those gains that we've seen this week. And if that's the case, I think there could be more rally that could drive the move higher. You have to take a look at things from a rubber band perspective. The further you stretch it, it's going to bounce back. And as you look at things like 6 weeks decline in markets, 6-week gains in the dollar, things are so far stretched out. So it has to come back before it makes its next move. And I think that's where we are. If you miss the move or if you're late to the party, that's where you have to understand the reward to risk ratio. At this point, we're seeing better risk to reward on reversals, but if you're trying to continue with the direction, now the risk is going higher because of those reversal risks. So economic reports, again, it seems like Thursday is the busy day of the week. Outside of that, all the eyes going to be on the equity markets. So let's do a quick currency analysis and see where things are sitting right now, and then talk about some charts and look at some outlook for next week. So starting with the crypto outlook, you can see with the charts, nothing really looks good over here. As we look at the trend score, all the trend score are sitting at about -3, which means the trend is very strong to the downside. Now, with the relief rally we're seeing a bit of a +1 on the velocity score. The question is that enough to really carry the markets into next week? And as we take a look at the chart on Bitcoin, Ethereum, Bitcoin Cash, as we go through these charts, you'll find very similar thing. So question is this a capitulation bottom, or do we have more downside risk? So you can see that the candlestick, things look a lot more uglier yesterday. Take a look at this capitulation bottom here. We almost went down, kind of reverse. So at this point, it started to show me that it wants to bottom out for a shorter term. And again, once we get a risk on rally, just like today, this will help everything. It will help alleviate the pressure on this cryptocurrency. It will help alleviate the pressure on other areas that are being hurting the most. So as we look at the charts, I think you have to be very careful as far as if you're going for a reversal setup. But worth taking a shot at if there's more legs behind this on the upside for the market movements. So Let's now jump into currency markets, and this is where some of the charts that we need to take a look at that looks interesting right now. Dollar remains at +3, and you can see we're getting a bit of inside candle today. So it's not really a reversal candle, but just an inside candle. If this start to break the lows for the day, for today's low, I think there could be a little potential risk for a pullback to the downside. And notice that we're still above the 20 to 50, so you're going to get a +3 there. And as a velocity, it seems like it's just basing here a little bit. So it doesn't look like it's ready to be shorted yet, but something we need to pay attention to next week if there is a bit of a pullback that start to come in place. Now looking at the yen, and look at that, yen has been in this massive downtrend for the past couple of months, and here we are, start to bottom out here. And I talked about this last week that we have to take a look at the highs and the lows of this rally. And you can see that when we broke out of that rally or broke out of that resistance, we got a very nice candle to the upside. And this is where question is, this is getting above the 20 and the 50. Is this time to buy the yen, or is this just a time to short the yen off this rally? So again, looking at the trend score, we're getting a +1. So not really jumping on shorting the yen on this rally. There could be more potential moves in the coming days, but right now, this needs to pull back below these moving averages for us to short again. But it's not really ready to short yet. I think it's likely to stay sideways because of that massive decline that we've seen. And this is where velocity today was -2, so it had a nice little, counter trend today. And that's what happens, with these shorter term velocity scores. You can actually capture some movements that could go against the daily trend. But this is just a movement that we got today. So next week we have to see what kind of movement we get in the yen. But it's not time to load up on yen shorts yet. I think there could be better shorting opportunity elsewhere. Now, talking about better shorting opportunity, look at that. Yen versus Swiss franc is actually trying to break lower. And I know the Swiss franc has been a bit of a tricky currency to kind of trade because a lot of wicks that we get on these candles. And every time it looks like, hey, it's breaking lower, it bounced back. I mean, a lot of times we got these little peaks or little shadows on that candle where it bounced back. But notice this time it's actually dipping lower. So something we have to pay attention to. The Swiss franc hasn't really the currency that we have been trading. But right now, at this point, the velocity score is -2. Trend score is -2. So this thing is looking directional. We will be paying attention to next week. Euro, and look at that failed little breakout there. And this is why we like to talk about these ranges and importance of having a follow through. So you can see that it broke out of that range, but it really didn't have a follow through. So I think the euro is back within the range, which means that the trend score remains 0. And whenever a trend score is 0, we can actually just play the velocity. If the velocity is higher, we can take a short-term trade on the upside. And if the velocity is lower, then we could trade the short on the downside. As you can see that we got a nice little, bucking the trend here, trying to move lower in the shorter term, making low base. So we'll take a look at euro in the next week, in the first couple of days. We'll look at some decent opportunities there. Now British pound, again below the moving averages, -2, and as far as the velocity is 0. So not ready yet to pull the trigger because trend is still down in the downtrend, but the velocity is telling us this is not ready to be traded yet. So we'll keep the powder dry on this one till we are ready again. Now look at the movements here. Canadian dollar. I mean, after consolidating for past few days, or we can go back to the end of April. We have been in this consolidation pattern, and we'll look at that. We're breaking out. So above the 20, above the 50, good candlesticks today. Closing above that handle. So everything is pointing out to bullish on CAD to me. We'll see what happens next week. One thing, every time you get a breakout that you don't want to see a failed breakout, meaning it gets to the point and then it pulls right back. That's a bit of a fake breakout. So as long as it stays above this little area and add another positive candle, I think CAD is ready to make another run. Till then, next week is what we really look for, a confirmation. Now, Aussie and Kiwi. Lots of questions I had for Aussie Kiwi, and this is where chart is telling you the story. And you can see that a big breakdown that took place in the Aussie. The trend, I mean, look at the moving averages been crisscrossing here, and we got a nice little rally off this pullback here, and then we got this nice little jump. Overall, the trend score, it remains -2, but notice that this is where it could be a do or die situation for Aussie next week. If it gets above this level, I think now we are back within the range. If we actually start to go back down, then I think we'd probably stay in a -2 trend. But I think it's at a cross point here. It could go in either direction next week. Aussie has been more sensitive to the market volatility. Every time market rallies, we see the Aussie jump up. We see market sells off, Aussie sells off. So there's a big component of market correlation that's taking place in the Aussie right now. So something to pay attention to. Right now, it's a -2 on a trend score, and you're getting a +1 on a velocity score. So again, that's just telling us shorter term trade, but overall, for a trade to get on a continuation basis, to get a continuity on back to back, then we have to get a follow through, and then that's where the trend score will change. Kiwi again, not so much luck compared to the Aussie. I mean, Kiwi looks terrible, and we can actually see that difference in the Aussie Kiwi pairing. When we take a look at that chart, we can see that this is a big divergence that's been taking place here. So, is there, despite that market rally today, I mean, Aussie still looks pretty weak to me. Oh, sorry, the Kiwi still looks pretty weak to me. As far as the velocity goes, this is 0. So not really ready to, pick a side on Kiwi yet. I think overall, it still looks pretty weak. The candlestick today was not really as encouraging candle. But again, for a trend-changing move, we get a higher high with a higher low. That's what establishes a trend-changing move. So far, as you can see, we have had some candles that got us higher, but those were all just shorting opportunities. So something to pay attention to next week. So as far as the trend score goes, you can see that things are pretty spread out across the board. But dollar and CAD still remains a +3. We got trend score on cryptocurrencies that's -3, and then we got a lot of currencies at -2. If there is a continuation in a reversal rally, I think we can move. We'll probably be able to see better scores in the Aussie and Kiwi, but notice that will take place in velocity scores, not as much in the trending score. So overall, you can see there the scoring is still +1s we're getting on these cryptocurrency, but trend score is still -1, and we have Kiwi still says bearish, Aussie -2 to +1, not really giving us a good signal. CAD, it remains pretty bullish. We have the dollar that remains bullish. We're getting mixed signals in the yen as well. So anytime you get mixed signals, just realize that those are just good shorter term trades, but they might not necessarily carry a big, carry continuation. So good continuation takes place when you get, both the trend and the velocity in the same side. So I think CAD is something to take a look at, and notice that the Swiss franc I've highlighted, something we need to pay attention next week as well. And a lot of the Swiss franc crosses actually looks decent to me here. So let's dive in, take a look at some possible trades for this upcoming week, and see where we can find a good risk to reward trades. So let's just jump into TradingView and start looking at it. So markets are closed now, as it's about 4:19 Eastern. You can see that markets did hold on to majority of gains. I mean, quite a roller coaster move. You notice that we got a nice little dip early in the second half of this day, and then boom, we got a nice rally. This is an encouraging sign where in the past we get these rallies, we sold off. We got rallies, we got sold off. So for a rally to hold is a positive sign currently. Next week, and this is where 4-hour chart will tell you a better story. And in a 4-hour chart, we're still in that little downtrend here. If we can get above this parabolic SAR, and look at that, the RSI started to move up a little bit, that will give us a better indication. But right here, right now, we don't want to be coming out and celebrating it too early and say, yeah, that was the market bottom. Always look for confirmations to mark those trend changing moves, because overall you want to be in the right side of the trend. So that's what's happening there. Let's also take a look at 10-year yields. And this is what I was saying earlier. I mean, look at that. We got a nice breakout in the yields, got it to 3.2%, and here we are back in the range. So 3% is still the level of resistance. Now we'll have to take a look at it and see if this yield's going to back off, and if the yields do back off, does it help the markets? So something to also pay attention to next week. Now let's talk about some trades for upcoming week, and let's actually take a look at how Swiss franc ended today. See if we can find a potential. So look at the 4-hour chart on Swiss franc. Again, we already identified, the break lower on a daily chart. Now, taking a look at a 4-hour chart, you can see that this has been consolidating for most part of May, and then it's just breaking lower. So I do like Swiss franc to the downside. The question is, what do we want to pair with? So let's actually take a look at currencies that are doing well, just like the Canadian dollar, and taking a look at other currencies that could have a potential for a reversal, like the Aussie. I mean, look at the Aussie is getting above, is getting a much better score here. RSI is getting up, and it's actually now above the RSI as well, or the parabolic SAR. So I think we can take a look at Aussie as well, and Kiwi. And again, Kiwi kind of seems the same boat over here. Let's actually take a look at Aussie Kiwi pairing, and notice that the Aussie Kiwi pairing in the last couple of weeks has been pretty sideways. And this is also up against a very strong level of resistance. You can see it goes back all the way. Like, you can go back to this 2020 level, but even going further back, notice that this thing really hasn't traded above that 112 or 114 for the longest time. I mean, that's the chart there. So we have to kind of look at it and see if this has any sort of continuation in that movement. But let's just zoom in here right now. I think Aussie and Kiwi probably are doing mostly the same thing. So let's talk about trades. CAD Swiss franc. Look at that. Beautiful run up. Got a nice little breakout above 77, sitting at 77.57. Let's look at the daily chart. Yeah, daily chart also showing the same thing. And a lot of times when we look at the daily chart like that, I mean, it seems like it's kind of extended. And you can always kind of look for, either a basing pattern or a pullback to just jump into. 4-hour chart, you can see got a nice little rally. It looks extended. So if you're looking for a trade, you can look for some sort of shorter term base or a pullback to buy into if you're not really ready to pull the trigger yet, because things look extended here. Right now, on an hourly chart, it definitely looks extended here. So I think a further pullback would be a decent area to kind of jump back into. So Aussie Swiss, Kiwi Swiss franc. Let's talk about Aussie Swiss franc. I mean, look at that. We're bucking the trend here. We were in this downtrend, and now we're trying to actually get back up. Same thing goes with Kiwi Swiss franc. I mean, so a lot of these Swiss franc crosses, notice that they're trying to get out of this area. And that looks actually much better if you take a look at Aussie dollar. I mean, Aussie dollar has been weak, but it's trying to reverse a little bit. So let's talk about dollar actually while we're on the topic. So we look at the Swiss franc pairings. Now let's talk about dollar itself and dollar pairings. Now, looking at the dollar itself, we don't really have a good strong indication for any sort of trend reversal. I mean, look at a 4-hour chart. It's actually now just hitting that parabolic SAR. The RSI is moving lower. So, shorter term, it looks a little bit bearish, but the trend has been pretty strong overall. So we have to really wait and see what happens with the trend. But what I really want to talk about dollar is just to look back in time where we are. I mean, this could be just a shorter term pullback just to buy into. I mean, we have seen this in the past. Massive movement take place. We see a bit of a retracement, and that turns into a buying opportunity. So dollar, I think in short term looks extended to me. But the question is dollar a better short, or can we find better short out there? And again, we still look at Swiss franc. That seems to be doing decent here. As far as the yen goes, like I said, I'm not really ready to peg a side on the yen. I played this on the upside when it did break out. At this point, I don't think I want to be shorting it right away, but just waiting and see which way it goes. Looking at other pairs, dollar CAD, I actually did a video last week and talked about the important level of dollar CAD, and you can see the dollar CAD rejected the big breakout point of 130.50. So if you go back in time and we look at the weekly chart, we're getting a nice little shooting star kind of candle on this. So I do like this on a further pullback because it did try to break above, but it failed. So this could have been a massive break, as you can see. This is a weekly chart. We haven't really broken that for the last couple of years. We got to the point, made a reversal. So I think at this point, I mean, 4-hour chart looks like it topped here a little bit. They got the -2 score on velocity, so I think dollar CAD seems to be doing decent here to the short side. Dollar yen is another one, and you can see that dollar yen had a nice little break and then nice little rally here. So where do we stand with dollar yen? I think dollar yen has been pretty resilient overall. Pullbacks have been quickly bought out. And if we want to see this fail, then we need to see these rallies actually fail away. Right now what we see is that this pullbacks get bought out. We need rallies to fail, which will give us a signal that, the dollar yen is ready to kind of move lower. So there are lots of pairs that looks decent as far as a reversal opportunity goes. Question is it the right time yet? I mean, daily charts looks extended to me, but on a 4-hour chart is where we can find that trend kind of change for a shorter term. So as long as the market could stay positive, one thing I've said it before, I think markets, these Aussie dollar, these pairing is not going to find a bottom, or the dollar is not going to find a top until market bottoms out. And if the market bottoms out, I think that's a green signal to jump on those trades. But yeah, like a lot of things looks very extended. I mean, look at euro dollar sitting at 104. I mean, these are some crazy levels that if you go back in time, we haven't really been at this level since 2015 and 2017. So this year has been a remarkable year to talk about breaking out, or like last year I wasn't really big fan of breakouts because things weren't really breaking out. But I mean, this year has been all about breaking out. Like look at dollar Swiss franc, it got above that parity level above the parity level, and you can go back in time and you can see the last time we were at this level were back in 2019, and the highest that we saw was about 102. So there seems to be a little bit more upside in this dollar Swiss franc till we hit that major resistance. But this parity was like a big level of resistance that it clears. I mean, same thing we saw in dollar CAD, even in Aussie dollar. If you look at the daily chart, notice that we got a nice little big break on the daily as well. So this is where not really wanted to be aggressive buyer of Aussie dollar unless it gets above the 70 level. This was a massive support that it broke, and again, you can go back in time and you can see that this support has been in place for the last couple of years as well. So this could be just a bear rally to short into, but for now, velocity is not going to tell you. Velocity telling you maybe it's not the right time to jumping on a short yet, maybe on a shorter term rally, but just keep an eye on this 70 level before you pick a direction. So lots of good trades, and I think I just let the next week roll up and see what we have in store for us. This has been quite a volatile market, so if markets start to take a breather, I think that will help to have some relief rallies that will take place in the markets. So markets, again, likely to remain volatile, but we're looking for a bottom price action in the equities, and that will again help a lot of the other areas as well. Use a proper position sizing and remain flexible. In a volatile markets, it's important to be able to swing back and forth based on how the market is telling you. When we pick a side and things happen very aggressively against you, that's where you have to take a look at the markets and kind of swing it on a day-to-day basis and not get so bold about a move and say, well, I think this is where it's going to go. I think you have to be flexible. We could have these relief rallies in between. They could be powerful. And as a trader, when the momentum is shifting, you got to shift with it. So that's the takeaway here. As for the classes go next week, again, we'll be meeting as usual for the midweek. Not a whole lot of news events next week to meet. We will have other events that we'll be in touch. But outside of that, we'll have the RBNZ rate statement that's due following week. So that'll be interesting to trade. But next week we'll take it as we go. Thanks everyone for joining. Be safe in this market. Have a good safe weekend as well. and we'll see you guys in the next week update. Cheers.